Budgeting. Budget is a plan in numbered format. When we say budget is a plan in numbered format, we simply mean to say that budget is a quantitative or monetary plan of the organizational activities. So the budget can be produced either in quantitative terms or in numerical or monetary terms. We prepare budget for a defined period of time. There is no hard and fast rule how long the budget period should be for. It can be a month, budget can be prepared for a quarter, or most popularly, budgets can be prepared for a year. Budget may include planned revenues, expenses, assets, liabilities, and cash flows for the forthcoming period. And that's what I was talking about, that it budget reflects the organizational activities in the future. A budget might be a forecast, which means of allocating resources or allocating the targets to the relevant managers. So the sales manager can be given a target to sell X number of units or to reflect the growth in the future period. Or another department, which may be a cost center, can be allocated resources such as buying the stationery or bills or any other office expenses. When the budget is produced, it simply reflects what the company wants to happen. So the organizational aims and objectives are further translated into the budgets. And that actually shows what is likely to happen in the future. So why do we plan for the future? Simply because we don't want to jump into the future blindly. So we want to be prepared to some extent. And if the managers achieve those targets or benchmarks, of course they deserve some bonus as well. So budget is quite useful for motivation. Now we're going to look at the purposes of the budget. In order to remember the purposes of budget for your exams, you can actually remember this acronym CRUMPET. So each alphabet has its specific meaning linked with the budgeting process and the budgets. So C stands for coordination or the teamwork. So budget is not just one man exercise. Budgets have to be produced by various departments, such as in the bottom-up approach. Then, with the help of budgets, we allocate responsibilities to various departments or managers. With the help of budgets, we utilize resources because the spending is made on the basis of the budgets or targets set by the management. M reflects the motivation, which simply means that the budgets are planned targets and many managers feel these are challenges and they need to achieve those challenges or targets and they have to meet the deadlines, which actually a motivating spirit in the human life. P represents planning. So as I mentioned earlier on, businesses organize and plan for the future so that we are doing the activities as per plan. E stands for evaluation of performance. So as the budgets are set, portraying the targets for various managers at the end of the budget period, the budgeted results are compared with the actual results and managers are evaluated whether they have achieved the targets or have not achieved the budgeted targets. And last but not the least, T stands for telling, that with the help of budgets, we convey our various messages to the departments and managers across. And those messages can be targets, responsibilities, who is who, and various reporting phenomena. Now we're going to look at types of budgets. So there are two major types of budgets, functional budgets and master budgets. Functional budgets are simply the departmental budgets. So, like sales is a function, or we can say sales is department as well. So, functional or departmental budgets. Why do we produce them? Because managers know their departments better than anyone else. So, we assign responsibilities to the departmental managers to set the realistic budget targets for their department. Functional budgets may include sales budget, labor budget, production budget, materials, usage or purchases budget. Cash is not a function. Many people think cash budget is a functional budget, but no. Cash is basically extracted from all the functional budgets. So, cash inflows may arise from the sales budget, and cash outflows may arise from the labor, production, or material, etc., other budgets. Master budgets simply reflect the summary or consolidation of all functional budgets. So when we consolidate the results of all functional budgets, it gives us master budgets, which is converted into three main elements. So the master budget elements include budgeted income statement, budgeted balance sheet, and the cash budget. Some people call it cash flow budget, but it can be the same thing. Thank you.